Today, GBPUSD trading down to some new lows. So we're going to talk a bit about that and show you what's going on. And we're also going to provide you guys, of course, a general market update. We take a look at other things like stock markets and as well at commodities. And if you're new to this presentation, my name is Alejandro Zambrano, and I'm the Global Chief Market Strategist of ATFX. I'm London-based, and this is something we do Monday to Friday here at investingcube.com, which is a website powered by ATFX and which I'm managing. Yes, if you are watching, you are most welcome to say hello in the little chat box. So if you have any questions about the markets, you're most welcome as well to put anything in the chat box. And that's it really. As well, before I forget, so we do have this Investing Cube Twitter account which we just created, and that's a good way to keep track of all the different content that we produce here, because as soon as we publish something, it goes out live. It's my stuff, but also Nicholas' stuff, and we also have a new guy called that is publishing a few articles, and that might also be interesting. So it's a good way to keep track of what we're up to. Might give you some ideas, and on the market, and as well, you can sort of keep track of what's happening. So let's talk about the pound then. So big warning, pound in general tends to sort of give false moves, but this is the pound. This is your daily chart, and the market here, as you know, on the daily, has been trading sideways for quite some time. Pretty much since, I would say, August of last year, the market has been in a very, very wide sideways market. And the different interpretations here, but as at most simplest, you have a low here from December, and then you have another low here from June, which acted as support. And also here as well, you were within sort of a bit of a inverse head and shoulders here developing. That failed, so you're a bit in a short-term sort of sideways pattern here, and that failed as well. So you have sort of a bit of a breakdown from that pattern, the short-term pattern, but you have the break to these lows. Now, also the other thing here is that we're within this range, right? So the price has been oscillating around 128.77 or so. It's been doing that for quite some time. But now we're leaving that behind potentially today. Sort of depends if we close below 24.79. That would sort of signify that this market is probably going to trade lower. There's also different views of looking at this, but we have what we call failed head and shoulders, with this being the head, and this section up here being the left shoulder, and this being the right shoulder. You might remember we talked about this, because at one point it looked like the market was carving out that and was going to trade upwards, right? But now the market moved down, up, and then down, and then sort of triggered the break here. And since then, it sort of suggests we can trade lower. The difference between the head and the neckline is about 837 pip, which would have been pretty much the same target distance on the break to the upside here. So that sort of suggests we can go down to 119.50. Now, it's not my preferred trade setup, but I can tell you this: the fact that we traded below this low and the June low does put pressure on the bears, and as long as you trade below yesterday's high, we may trade lower. I'm not sure how much lower. Obviously, the pattern suggests we can trade much lower, but if you look to your left, the next major support level is down here at 10 from April 10th, 2017, and that's sort of what I would be targeting. And then you have a break of, take that level out, we have 121.06. And I think a little bit what's happening here is probably that people are pricing in a hard Brexit. I think that's what's happening, to adjust for that, which will probably happen October 31st, the way things look right now. Because it's unlikely, I think, that, well, you never know with policies, right? But the way things are looking right now, it's unlikely that the EU is going to give a very different deal to the UK. And as we know, both Jeremy Hunt and Boris Johnson are not very happy with the current deal. In fact, they can't pass it through Parliament, as you know. And it could be that we're going to have a hard Brexit. But then, of course, there's no parliamentary support for that either. So I'm not sure exactly what's going to happen. The market is worried, though, and I think that's why they're selling a bit of pound. Now, for the pressure here to sort of, there's a lot of people like that I know that have been trading this for like since they were kids, and people that are like 55, 56 now. They think it's going to be, I'm talking about a guy here at the at the office here at ATFX, he's not necessarily saying that we should be bullish here, but he says that when we have that hard Brexit, on the day of having that hard Brexit, we might see a slide, and that could be a big slide. And then after that, the market's gonna go upwards. And we were talking about this actually yesterday, that the pound tends to give false moves. It tends to be rather range bound, and historically it has been rather range bound without a doubt. If you look at this monthly chart, you can see how it's actually this stretches from 1971. So you can see it's a rather choppy market with some wild swings, like especially here, and that sort of could result into like a significant move to the upside. But we'll deal with that on October 31st, if we have a hard Brexit at that time or not. What's also something interesting, I actually pointed out this many times before, is that on the referendum, we trigger this massive head and shoulders. So you have a big head, big left, big right shoulder, and then you have this section here, and that sort of suggests a significant decline. And overall, I think it makes sense, at least from a purely technical perspective. Let's see what happens. All I can tell you for now is definitely in the short term, this market's under pressure. Here's Euro versus the USD. So this market is under a bit of pressure here as well, which makes sense with the pound being lower, people buying a bit of dollars as well. Aussie dollar turned bearish overnight as well. New Zealand dollar was already bearish. So when the break to the downside here happened, when the break to the GBP happened, this is obviously under a bit of pressure. I think you go a little bit lower. It wouldn't surprise me if we try to take out some of the lows here from the June 18th low, and then we'll see what happens. The way this looks like is just trading sideways. The only way I think this could gain significantly is if the Federal Reserve, you would say, okay, we're just gonna cut interest rate once, and then forget about all the other cuts that you have priced in. That could be something. And then of course the US economy improving. But there is I think the Fed's own model suggests there's like a 32% likelihood of having a recession within 12 months. And the way that indicator is right now is at such elevated level at about 32% that when we are about these levels, it's seldom that it actually pulls back. So when we're up at 32% likelihood of a recession, again, it's unlikely it's just going to pull back from these levels. I'm going to see if I can write an article about this a bit later on to show you. So with that in mind, again, it's quite likely that the Fed will cut rates. Again, if you want to just trade the range, I think my son could potentially buy down here a bit. Dollar versus the Japanese yen. So we talked about this. We said a break to the upside here could potentially lead to a bit of gains. Here as well, you have an inverse head and shoulders. The actual pattern goes like that, or the actual neckline, left, right shoulder, head, and the potential profit is the difference here. Need to put it like that. That gives you a potential target of 10,029. You have this high here as well, which makes perfect sense that the market could reach. So that's the break. If one would have bought on the break, reward ratio 2.14. If we hit this high, which is the high from May 30th, if we hit the actual target, looking at 2.92. This could easily pull back a bit, so we need to be ready for that. As for gold prices, they're a bit under pressure today. I think it has to do more with GBP and Eurodollar being bearish rather than people selling gold. It's actually a funny reaction to see how the stock markets are lower and gold is also going down. I think here, as I've been saying many times before, this is overall a bullish move. I mean, even on the monthly, we had a big breakout, as you can see. So you had the June, which was very, very strong. That sort of ensured that we took out these highs, and we're having a bit of a pullback, which is fine. I mean, even on the weekly, we're pulling back. Unfortunately, we don't know for certain anything about the markets because they're random. It could be that it needs a steep pullback, but ideally it doesn't trade much lower. If it's a genuine uptrend, it shouldn't really trade much lower, and that's why at least on the daily, the trend is bullish above 1381, as I said before, because this is the latest low. Obviously, take that out, we go lower, and then we'll see what happens if it's ever gonna bottom out or down here. So for now, remain bullish above these levels. Of course, it's not doing too much, but yeah, there's no change to the outlook. Now here is the price of gold, sorry, crude. So the crude oil in the short term are slightly bearish, without a doubt. The market were creating higher and higher lows, took out the low. It's now stabilizing. Now, I think though, I mean, we're pretty much the entry, and I think this is, it doesn't have a strong reason to be trading much lower, at least not from a macroeconomic point of view, given what's happening in between US and Iran, and that can sort of lift things to the upside. So I'm not really sure what's going to happen, but technically the short-term trend is bearish below this high. This is not an ideal situation though, because you see here the market can only trade down to 54.72, right? So it's not that much lower it can go before you have some decent lows here, and then you look at something like the weekly chart, and you can see we have even more lows here and here. So this is rather range bound, and that is really what makes GBPUSD interesting, because we took out that December low, and you need to go back all the way into 2017 to find the next major low, and that's why this is far more interesting than crude oil, because support is so far away, and that gives you those good risk-reward ratios. It's the same thing with gold, really. You know, on the break to the upside here, you know, the next major levels, the next major actual high is this one from September 2012 at 1,800. So that's sort of the next major level. And of course, you have some minor levels like 1,615, and that is really what makes this is also more interesting than crude. As for the S&P, it's under pressure, unfortunately. So we had a breakout. Let me hide the analysis. So you can see that we had this high from September 18th and this high from May 2013. And usually when we break into a new all-time high, you tend to have a bit of follow through. Of course, with the markets, you know, I personally think it was a bit weird that the markets were trading up here, but you know, with the good non-farm payrolls and you know the economy not looking as bad, the market sort of moved upwards. Now in the short term, again, we had that little break here. We talked about buying here already on the 29th, on the break to the 29.77 level. And if you look at the 4-hour, we pretty much remain in an uptrend for now, at least. You can see here how this is the trend defining level at 29.51, and as long as you're above that level, the market should go upwards. You can see that the market traded higher already on the NFP day, closed nicely, but people here are selling, and there's not too much to do about it. If the market trades below this level, probably trade a little bit lower. As for the German DAX, it's now in the buy zone. So we talked about buying here, despite the market going upwards. As I said, this is the buy zone, and this is really where I would be looking to get involved if you want to buy. The trend funding level right now is at 12,258, and fib wise, from the low to the high, you know, we declined to the third fib, so the market should not really trade much lower, and should really stabilize here. And that's pretty much it. Do you guys have any questions? Let me see here. So let me know if this chat box works, because I have been hearing from some of you guys that it doesn't always work. Okay, so it does work. Good. Good morning, Marvin. Hope you're doing well. Interesting times. Markets starting to heat up a bit, at least Forex markets. Don't think we're going to see euro dollar breakout anytime soon. We have, okay, good. We have a little test here. Good morning to you guys. So unless you have any questions, I think we're going to wrap things up. Don't forget to click here and to like the video. Very straightforward. Just click like that, and that helps a lot as well. I do have a WhatsApp list where I send out this video to anybody that is on that list. So you get the video. Sometimes I put other stuff, but not that often, so don't want to bother you on that all more than once a day. Not that I think it's bothering, but I don't want to send too many messages. And if you are interested to be added to that list, then just send a WhatsApp message to this phone number here. Let me just see if I can make it work. Like that. Just click on that. Don't forget to save my number. If you click on it, it's just gonna show you something like this, or if you're on your mobile, it's gonna work as well. You can also just add that if you want to. If you don't want to be, sending messages, then you can just ping me and say like stop, and then that's it. Okay, interesting times. Let's see what happens with the markets. If you have any questions during the day as well, you're most welcome to reach out. Don't forget to subscribe to the Twitter account of Investing Cube. It's free. You get all the different updates. Of course, I publish stuff on my own as well, but not everything goes on mine. Just the stuff that I publish. Sometimes I retweet some of the other guys' stuff. But if you want to stay on top of the market, don't forget to subscribe. And don't forget to check out the actual page here. Most of the stuff is free. It's all technically it's all free, really. But we have stuff like this where you need to become a member, and like this up to here as well where you need to become a member. It's analysis. It's the same similar analysis that you've seen here, but sometimes what it does is that we offer more explicit analysis and levels, and it's free to become a member, really. So it's very, very straightforward. You register once, you can access this. I just heard from the team at ATFX. The quarterly report for Q3 is ready as well, so we're going to upload that. So you can have access to that one as well. As well, we have a ton of webinars. I don't host those. It's our partners, but we have stuff in Spanish. We have, as you can see, German, things in English as well. We have the next one coming up on July 10th at 7 p.m. And then we have another one on July 16th and July 17th. So we have a bunch of webinars here if you want to expand your knowledge. As well, we have education videos up here where you can learn more about the market as well. Okay, guys, have a great day. Thanks so much for supporting, and thanks so much for watching. And don't forget to hit that like button, and I'll see you guys tomorrow, same time here at ATFX and Investing Cube. Thank you, and bye-bye.